I am Eduardo Azar, chairman of dLocal, early investor from 2015. I want to tell you a little bit how I got involved on this. I was in Punta del Este in Uruguay, pretending to have some good holidays, and all of a sudden, one common friend introduced me to Andres, Sergio, and they started talking about the idea of creating a company to work in emerging markets. And I was so impressed when I met Andres, Sergio, Seba, Jaco, because they found a problem. And this is the way to start a business. They found a problem, and they found a solution. And the problem was that people in emerging markets want to have access to buy online, and it's the worst thing that could happen. Someone wants to sell, the other wants to buy, and the transaction doesn't happen because of lack of infrastructure. And when I saw that, and I saw the idea, and I saw fundamentally the entrepreneurs, this is what immediately I jumped into because of them, because they were terrific entrepreneurs with great ideas and willing to work very hard. And this is how, personally, I joined the company, investing and acting, and then became a chairman. After 8 years of working hard with a lot of passion, we are here. We made the company public. We started with one country. And this is also important to say. When the company started in Uruguay, and Uruguay has 4 million people. So if you want to make money out of 4 million people, we should luck. That is difficult. But that is the adversity. So when you have adversity, that you have that universe, you have to think out of the box, and you have to go global. And this is exactly what dLocal did. Not relying on the Uruguay market and relying on global. And we started with Brazil, and we follow with different countries, Argentina, Paraguay, Uruguay, and now we have 40 countries counting. What we do here, what we do dLocal for merchants is improving the conversion rate. So we make the transaction happen, we improve the conversion rate, and this is what we understand, because we are from emerging market, and there is a lot of similitude with Nigeria, with Brazil, and because we understand, we managed to find a solution. I cannot be more proud of what we accomplished so far. Another thing that I want to point out is that we are processing 12 billion, 15 billion is nothing. We are scratching the surface. There is a trillion to process. You will see here that the potential of dLocal. So when they talk about saturation, we are maybe 1% of what we can do here. So our view is 5, 10 years. We are not concerned about 1 quarter, 2 quarters. I would like also to take the opportunity to welcome Sergio Fogel, that is the founder, but also decided to come as an executive, will be extremely helpful for the company. He worked with Sebastian for the last 10 years, and I think that will be a great addition to the executive people. So now I want to call Martin Escovari from GA. GA was an early investor. We were so lucky to find a partner like GA. It's a dream of a partner. We work together, and now, Martin.
Thank you, Eduardo, and thank you everyone for joining us for dLocal's first Investor Day. It's a very special moment for the company, and I'm grateful for the invitation of Seba and Eduardo to invite me to say a few words. My life is in Latin America. I was born and raised in Latin America. I was an entrepreneur and have been an investor in Latin America. GA has been in Latin America for 20 years, and we've invested $7-8 billion in Latin America over that period. And if you look at our returns in Latin America over those 20 years, they're among the strongest we've had globally. And where many of our investors come to us and say, how do you do it? Because Latin America is not a fertile ground for successful investing in the private equity space. There are very few funds that have actually made money in Latin America. And as I reflect on 20 years of work, we've managed to do well because we tackle what Eduardo called big problems. So there are many things that don't work in Latin America. Those of you that live in New York know that renting an apartment in New York is hard. It's 10 times harder in Sao Paulo because there's all fake listings and there's no MLS, and there's no price discovery and there's no FICO scores, so you have to prepay 6 months of rent. So if you create a platform that allows this to happen seamlessly, you create a lot of value for your customers, and you can capture a lot of value for you. Buying a used car, that's difficult in the US. It's impossible in Mexico. You think you're buying a car, it's not actually a car. And if you create a platform like Kavak that does it seamlessly and so forth, you can capture a lot of value and so forth. If you retail investing, if you rely just in 4 banks in Brazil, that's hard because they charge you a lot for limited assortment. But if you create a platform that's open, and those of you that know XP, that's also been one of our great investments, and we've been investors in XP for 12 years now. And we invested in XP when it had 200,000 customers, now it has 4 million customers. It's changed the way Brazilians invest. And I think dLocal is one such story. Cross-border payments into the emerging markets are horrendous. If you're a merchant trying to sell to Uruguay, Paraguay, Bolivia, Brazil, Argentina, not to mention Nigeria, Muddy Waters' favorite country, it's impossible. It's very, very hard. Acceptance rates are, you have to deny 20 to 30% of the people that are trying to buy from you. And if you're a business that has 95% gross margin, that's a lot of profits that go away. So if you create a solution that allows you to safely accept more customer demand, you create a lot of value for your merchants. You create a lot of value for the end customers who are able to buy something that otherwise it's more difficult to buy without an international credit card, and you can capture a lot of value. And that, in a nutshell, is what dLocal is trying to do at scale across the globe. When we invest in an opportunity, we look at 3 driving criteria. This is across the globe, and it's also true in dLocal. First, we're trying to find opportunities of companies that are going after very large markets. Cross-border payments is a $1 trillion opportunity, and it's growing. dLocal's market share, 1.5%. Amazing TAM, as large as TAM as we can think of. In the 4 years, GA has been an investor at dLocal. The company has grown 10x. I hope it grows another 10x in the near future. I cannot say the date, but because it's a safe harbor statement. But there's a lot of high ceiling to grow. The market is as exciting as there is in terms of market size. The second criteria we look for is does the company have a sustainable competitive advantage? And the way I like to measure competitive advantage is does it have gross margin? Because if you're better than your competitors, you can charge a little more. And we know dLocal has a relatively healthy take rate and relatively healthy gross margin because it's addressing a problem and the merchants are willing to pay for it. Is that gross margin sustainable? As we know, every market gets more competitive over time. And if you dissect the gross margin of dLocal in the more competitive margins versus the less competitive margins, obviously it's higher in the less competitive markets than in the more competitive markets. So there is a trend of margin compression that if you take a 10-year view, is going to happen as more and more markets become more competitive. It's inevitable. Against that is dLocal's ability to add more value through new services and new countries. And one of the fundamental theses of the One dLocal strategy that Seba and Hako so well articulate is having gone through lengthy customer acquisition processes. So when you're bringing on a new merchant, it takes 3 to 18 months. How long did Amazon take? Was it 2 years? 2 years. It takes 3 months to 2 years to be certified by one of these merchants because, rightly so, they're concerned about suitability, they're concerned about the data integrity, are we paying all the taxes, do we have the right licenses, blah, blah, blah. So it takes a really long time for a merchant to get comfortable with letting dLocal process their money. If they have to do that with different merchants in each of the 120 countries they sell to, if you're a global merchant, that's unmanageable complexity. And the One dLocal solution is one pipe, same standard of care. We solve all your problems across multiple very complicated countries. And we think we're only scratching the surface in our ability to cross-sell the one pipe to multiple countries. I can't remember the statistics. Average is 10 countries. Should be much higher. We'll go to many countries and we'll cross-sell more and more. And that is a way to preserve your gross margin for longer by being able to solve the same problem in different customers with the same pipe to the customer. The third angle, the third criteria we look at, does the team have the right go-forward capabilities? Is this the right team for the mission ahead? And it's undeniable that the team that dLocal has today has built an amazing business that's grown 10x in 4 years and been very relatively capital efficient and it's highly profitable. It's a team that's worked together for a long time. It's a team that's added outside talent to upgrade systems controls which are needed, and it's a continuous need. That job is never done. There's always more to do. It's a team that's been tested by hard times. I think Muddy Waters made for a very horrible Christmas. And they're all Jews, but still, Christmas time was horrible for a lot of our not all, but some of them are. It's been tested by some tough times. It's been tested by some tough geographies. Our entry into Africa is hard. You think Argentina is complicated? Get ready for Africa in the next 3 years. It's hard. Regulation is tougher. FX controls are harder, and dLocal is going to have to adjust to that. And they've proven they have the stomach for Latin America. And I say if you make it in Latin America, you can make it anywhere. So let's see if it applies to Africa. But I've seen that young team grow. I've seen Seba and Hako grow as managers, and I'm very proud to have them as partners. I'm very grateful for the sleepless nights and the hard work, and it's not easy. So I'm committed to the story, and I think we're not even in the second inning. So I hope you stay with us for longer. Thank you very much.
Hello. Hi everyone, how are you? Good morning. It's great being here today. Before we go into the presentation itself, I want to introduce Sergio officially. Sergio is, as of yesterday, our co-president and chief strategy officer. But I've known Sergio for, at this point, 20 years, and I think it's worth to share a little bit more on where we've known each other.
20 years, how old are you?
I'm now 33 as of last week, so it's been a long, I know Sergio from school, so it's been a long ride there. So Sergio, if you can introduce yourself.
Yeah, well, just to make it clear, we met in a completely different context, in a non-profit that Seba was managing, and I always like to say that if you manage to motivate people to go every day to work in a non-profit, without the motivation of the salary and the ability to fire someone, you're a great leader, and you have shown that. About myself, I'm I was born and raised in Uruguay. I started my career in Israel, where I studied. I've been doing quite heavy R&D in the VLSI space in my previous life, so I like deep tech. Then I did my MBA at INSEAD in France. Went to work for Oracle, so I have experience both on the technical side and in IBM and in the Oracle, which has the most amazing sales organization you can think of. And started my entrepreneurship career over 20 years ago. I've built and afterwards invested in many different companies, so I have quite a lot of experience in starting up a company. And we've started this company 7 years ago with Seba, whom we met a long time ago, but in a different context, and then we met in a birthday party of all things. You want to tell the story?
Of my mother-in-law. And I guess the biggest conclusion is that one needs to go to your mother-in-law's birthday. But Sergio, it's great to have you on stage and joining us. I think Sergio's experience will be extremely important to us as we navigate this new stage on the company. We have a lot to cover. Before we get right into it, we want to cover a little bit on the latest news in Argentina. We want to get that out of the way. It's really important for us to be able to discuss our story and where we're heading. So let Sergio read a few opening statements and I'll complement and we get right into the presentation.
Yeah, well, as you know, we have filed a 6K document, so we cannot say much anything actually beyond that. What we can do is explain how we operate in Argentina. We accept payments from end users or companies for the largest merchants in the world, names that you'll see in the presentation. For your reference, our average credit card transaction in the country is just $6.50. So it's massive services. Then we expatriate the funds through various established and highly reputable banks, both local and international, following the central bank rules, and also following different layers of compliance, both of the banks and of regulators and their own compliance. It's not easy to move money around in these countries. I have a bank account here at Chase Bank. I send a wire and that's it. In these countries, setting up a wire is much more complicated. You need to provide a lot of supporting documentation. So just to make it clear, contrary to what was reported in the press, every wire that we send has customer transactions behind it, and it has supporting documentation that sometimes we're required to provide, and we do according to the law. We have always operated within the regulatory framework, which has changed many times during the last few years, and we will continue to collaborate with the authorities whenever required. Again, we wanted to get this out of the way. This is not what we came here to discuss. We want to discuss about the huge opportunity that we have ahead of us. So let's get started.
The only thing, Sergio, sorry that I'll add is that our business in Argentina is fundamentally the same as in every other country where we operate. It's the same merchant base. It's the Facebooks and Netflix and Googles and Microsoft of this world. Argentina is complex. We believe in complexity. We add value. So we're committed to the market in the long run. It might be a bumpy road, but we're really, really confident on the way we've done things and the way we've operated over the years. Not only in Argentina, but across every market where we operate. The standards are exactly the same in South Africa, in Mexico, in Brazil, in Nigeria, in Indonesia, and also in Argentina. Now let's go to the more interesting part, if you don't mind. We're going to see a short video on who we are at dLocal, if I can make it work.
No, I think someone has to.
We want to grow in emerging markets, but it's not that simple. Accepting online payments and paying vendors and partners in emerging markets is complicated.
I don't have any international credit card or anything like that.
Inside India, it is fine, but if you're giving the money outside, it is a big problem in India.
The transaction would bounce back.
As much as I wanted to buy something, I couldn't.
I wish we had more options.
Whenever I find a service that's not available, it just breaks my heart. It's like I'm blocked from the world.
Meet dLocal. dLocal enables global merchants to connect with billions of consumers in emerging markets with one API, one platform, one contract. We give global merchants access to over 900 payment methods in 40 countries. We offer both paying and payout services to our customers to enable them to accept online payments and pay in local currencies. Our four-platform solution enables global online marketplaces to offer their sellers the ability to accept payments in emerging markets. And our invoice collection solution supports the B2B payment process from start to finish by enabling payment in local currencies. We power a diverse set of high-growth verticals, including ride-hailing, streaming, financial services, retail, advertising, SaaS, e-gaming, travel, and e-learning. More than 600 global merchants such as Microsoft, Amazon, and Spotify trust us to expand their business in Africa, Asia, and Latin America. We settle funds locally and internationally, managing FX and tax payments along the way. We make the complex simple. dLocal.
So a little bit of our history, Martin was covering and Edu was covering around that. We started this journey in 2016, and there was a clear understanding, both Sergio and I, Uruguayans, Jaco, Andres, we come from emerging markets. And if you happen to be born in New York and you want to buy from Amazon, you swipe your card and you buy online, one click, no friction whatsoever, and you get the product the next day. If you want to do that same transaction, but you were born in Nigeria, or in South Africa, or Indonesia, or in Mexico, there's massive friction. We didn't know about all that friction when we started. We knew about the friction in Brazil. We launched the first payment method, which was Boleto, a cash method that has now been replaced by Pix. And we thought we had covered everything. We thought that was it. We had GoDaddy, who was our first customer, and we said, okay, we unlocked the world. There's nothing else to be done. We were obviously very wrong. And one of the things we understood is that this problem we saw initially in Brazil with cash methods wasn't only common to Brazil, not only common to cash methods, but it was something that was happening across the wider emerging markets. When we started to speak to our customers, or our dream customers back then, so we went to Google, and Google knew that they had friction. We went to Facebook, they knew they had friction. So what we've been doing all of these years is understanding that friction exists and listening to the merchants saying, how can we bridge those gaps? How can we really create infrastructure that would make it a level playing field? It should be the same way to pay and get paid in the US as it is in Brazil. It should be exactly the same way to process a payment in Nigeria as it is in the EU. And that reality is not there yet, and that's the opportunity we are going for. The other thing I'll say is that this market is huge, and as Martin was saying, it only keeps getting bigger because, again, if you believe that emerging markets are here to stay, and obviously they are, and demographically, these are some of the fastest growing countries on earth, our market keeps getting bigger. I sometimes get questions from some of the people in the audience, do you have enough of a TAM? And the truth is that I never think about it. It's never been a discussion in our board. Do we have enough market? It's huge. It's huge out there. Our ability is, are we going to be able to capture that opportunity? Is it going to be us or is it going to be somewhere else? Are we going to be able to abstract all that complexity? So we really don't spend time understanding the size of this market because the market is absolutely massive. The last thing I'll say is that we bootstrapped this company. 2016, 17, up to 2019 when GA came on board, we bootstrapped. And I think that has deeply affected our culture. We are frugal. We are not only owners of this business, but we act like owners. We are partners in this journey. This is not VC money that we were spending. It was our own dollars coming out of our pocket. So everything that happens in our company, we take personally. You might have heard me say so. Yes, we take it personally. This company is our life, for better or worse. And we really believe that has ingrained who we are. We speak a lot about culture. Those early days have really defined us. We still remember where we come from, and we like that ambition of saying, okay, the opportunity is huge, we're going to go after it, but we know where we come from. And that balance is really important to us.
Okay, sometimes people ask us if we are tackling a niche market. It's actually, if it's a niche market, it's a huge niche. But we are riding on a secular trend. The same thing that Seba just said, it's something that it's a huge and secular trend. There's a very big population in emerging markets. We all know that. There's a big and growing very fast middle class, urban, young, connected. Those are people that want to consume the same type of services and buy the same type of goods that people here in New York or people in London or wherever in the world want to consume. Many of them are educated. They are getting high education. They are learning online. They are learning the same way as my kids do through YouTube or through Coursera or these different platforms. They are well trained, and more and more they are working as freelancers for international companies, selling their services, be it programming, graphic design, or even driving a car, a ride-sharing car, and they need to get paid. So we are talking about a massive population, a population that is growing at 10 times the growth rate of the developed markets. And it's a huge market that is growing very, very fast. That's the market we are going after. And the other thing is that these consumers are in a way forgotten. You try to buy something in these emerging markets, it's really hard. Martin already said it, we are repeating, but we really want to get the message through. There is a lot of friction. People wanting to buy goods or services, people wanting to sell those services, transaction cannot happen because the payment cannot get through. One example, I'm a fairly sophisticated user of payment methods, as you can imagine. Last week I was trying to buy a ticket from Toronto to here. It took me 15 minutes to complete the payment because the billing address was outside of the US, but the credit card was issued in the US. And these are the type of nightmares that the consumers are facing every day. The ones who go through that trouble.
These are just some examples from the internet. These are all public information. There's two things I would like to emphasize here. This comes from PayPal. This is an email that went last month, announcing their users in Brazil that Pix wouldn't be accepted anymore. You know what Pix is. So Pix is the highest and more penetrated payment method. And PayPal is an amazing payments company, one we admire. And they cannot accept Pix. So the amount of friction there is in the market, the amount of complexity a global company like PayPal needs to abstract really, really compounds when you think of it. Netflix is not a payments business. The other example I like on the right, and this is one that I'm extremely proud of, this is a tweet from a user in Mozambique asking Starlink to start accepting payments. We came in, we allowed those transactions to happen, and now that user can buy internet, can buy Spotify. And obviously, we're not providers of internet, and we're not providers of Spotify. But when you generate opportunity, and when you create infrastructure, good things happen. So the friction is really real. And I know it's very hard to find it tangible here when you're sitting in the US. But if you're sitting in Mozambique, in Nigeria, or in Brazil, you feel that friction on a daily basis. This is what the problem is, and this is what the users want.
Sorry, and if I may add to that, other payments companies If they don't process a transaction, the transaction will be processed through another method. In many of our cases, if we don't process the transaction doesn't happen. As I told you, I've invested and started a lot of companies. There's Y Combinator, the famous accelerator. And they have this question when entrepreneurs apply. They ask this, what do users do or go through now because the product you're building doesn't exist yet? And I want to show you some examples that apply to the market or to the problems that we serve. Things that people do in emerging markets when they want to buy stuff and they can't. Maybe you have to use a VPN because of security reasons of your company. People in emerging markets, they all know what a VPN is because that's the only way they can access different services. Sometimes to watch a movie, sometimes to access, I don't know, in the case of China, to access WhatsApp or different things. Prepaid cards issued internationally, and you pay a premium to get a prepaid card issued in the UK or somewhere else. Virtual phone numbers so you can have a simulated presence in the US. And I'm not talking about anything illegal. I'm talking about people trying just desperately to buy and they cannot do it. And some people manage to run through all these hoops. Boxes. You get a physical address in the US where Amazon can send you a package and these people will reship the package to your country. So the people who use these things are the most sophisticated users. When a merchant tailors its offering to a certain market and it starts with payments, then they see their conversion rates go up by, I don't know, sometimes an order of magnitude, and they find an up market where they have much less competition, and that's where we get in.
One of the things we sometimes struggle with is make this tangible. This is all very conceptual. This is how it looks on the reality. This is a checkout from Spotify. In this case, it's a checkout in Mexico. This is how it looks in the left. Visa, MasterCard, and Amex. Pay now, $10. Good luck to understand how much you're going to be charged in local currency. You only know once the bank state. If you happen to have an international credit card, you'll input it here, you'll get a payment. How much local currency, how many pesos you're going to be being charged, you don't know before you start. This is how that same checkout looks for Spotify with us in Mexico. You'll see those tarjeta de crédito, credit cards, but those are going to be locally acquired, which means, number one, that anyone with a credit or a debit card is going to be able to pay. Number two, the user will have full visibility in terms of how much you're going to be charged in Mexican pesos. And there's a small thing there that says OXXO. I don't know if you see it from back there. OXXO is a cash method. People in Mexico pay Spotify subscriptions with cash. And Spotify has come up with weekly subscriptions. And I know this sounds super abstract. This is how the reality looks on the ground. The other thing I'll say is that this example we could do 900 times with 40 different countries and 900 different payment methods. All of this falls under one API. So if Spotify wants to do OXXO, and then they want to do Boleto, and they want to do Fori in Egypt, and they want to do Verve in Nigeria, they will need to reintegrate, in the example I gave, 4 times. With us, all of that is abstracted in only one API. This is a Nike example. This example comes from Chile. On the left, you see a traditional checkout. On the right, you see the thing called installments. Many of you have heard now about buy now, pay later. For those of you who come from emerging markets, we've been paying with installments forever, at least since I was born. I've heard of cuotas or parcelado. And if you're a retailer and you don't offer installments, you are not really a retailer in these markets. We offer our merchants the ability of accepting installments without taking credit risk. We don't take credit risk either. We abstract, again, all of this complexity. We give them the ability to get all the settlement periods together. And again, these are all the small incremental things that make our company valuable. Martin was speaking about our margins. This is where our margins come in. Abstracting this sort of complexity. It looks basic. It's 4 boxes. It's really complex to run it behind the scenes.
So we've come a long way. This is our growth curve. I remember very vividly a few years ago, not so long ago, we had an offsite meeting of all the employees, and Seba was saying that the dream of maybe one day processing $1 billion in a year is not that far away, and I was saying this guy is a dreamer. And today, $1 billion of pay-ins would be a very bad month for us. That's something we're used. This is our growth curve, and this is in terms of TPV. I think we have a slide.
Just to comment, Sergio, on something here. In 2016, we processed $100 million for the full year. Today, we process $100 million in 2 good days or 3 bad days. And the reason we're saying this is it's hard to get a payments business started. You need to get the trust of global merchants. You need to have the operations. You need to have the financial infrastructure. You need to have the licensing. So there's huge momentum. There's huge inertia in our business. The fact that we've grown at this rate, I think it's a testament not so much of how hard we work, because we did work hard, but it's a testament of our strategy. We are indexed to some of the biggest global merchants in the world. And when you hold tight to them, you grow. So this is just a consequence of our strategy.
So this is, we're not going to bore you, we're running a bit late with too many graphs. We'll let Maria bore you with the numbers. I don't know where she is. But yes, we've been growing very...
Not bore you, amaze you.
Amazing. But we've been growing very, very consistently, very fast. We were standing here in Nasdaq 2 years ago with a very interesting story to tell, I think. Since then, we grew by a factor of 3 in all major metrics. Our volumes are more than 3 times higher. Our revenue is more than 3 times higher. Our adjusted EBITDA is more than 3 times higher. That's super impressive. And as you know, there are very few companies that have managed this growth at this stage. And we feel that we are just beginning.
One of the things I'll say is that when we went public, many of you were asking us, are you investing enough? It was a different world out there. No one cared about the box on the right on the EBITDA. And we said, look, we care because we want to run a business that is sustainable on the long term. And we believe we might be old school, but we think profits are a good thing. And I think that alignment has paid off. These are the key metrics. You can ask anyone at dLocal, what should I look at? Look at TPV, revenue, gross profit, and EBITDA. Anyone on the team will know that. Why? Because if you run just a business based on TPV, but you don't get profits out of that, that's not what you want. And if you don't manage to turn those profits, those gross profit dollars into EBITDA, then you are not really adding value to our shareholders. Diego will touch on this, but 76% EBITDA margin when divided by gross profit, it's best in class. You've heard me speak a lot about Zaydi and how much I admire them. Their target is 65% in the long run. We are already at 75. We want to keep the independence to invest because we believe the opportunity is massive, but we're already at profitability levels that are best in class.
Sorry, if I may add to that, people ask us, how are you so efficient? And the truth is that we are tapping on the best talent in emerging markets. And I've seen amazing talent. I've worked with the best engineers in the world. I've worked in the best sales organization in the world. And believe me, there is the same or higher level of talent in emerging markets. And we can get that, and we can get that with a level of commitment of our management team that you don't see anywhere else.
On these slides, we're going to cover them very quickly. These were our internal targets when we went public. This comes from 2021, both at the TPV, revenue, and adjusted EBITDA level. We did what we said we would do at IPO. Not only that, but we've been significantly ahead of that. In some cases, 2x. In some cases, 1.5x. So when we sat down here 2 years ago and we said, okay, this is the vision for the company, we've widely exceeded our estimates. So we take promises or guidance really seriously. We are not in the business of missing what we said we are going to do. And when I say that we take this personally, we really have our words back in what we say we would do. So I think this is very unique as well. We said we would do something. The market obviously changed, the world changed, but we've been able to deliver on that. Not only that, but much more. We're going to be covering for a few seconds on our culture and what gets us here. Just a short video, and we're back.
dLocal has a great team of great people, very different people from all over the globe, but that's what makes us who we are, and that's what makes dLocal's culture.
We are one dLocal.
dLocal.
Somos uma dLocal.
אנחנו dLocal. Simuñe qua dLocal.
The most exciting thing about working here is to democratize payments, is to develop markets, and is doing things that sound impossible.
When we innovate, we do it with and to add value to our customers. connecting global enterprise merchants with emerging market consumers.
We're bold and not afraid of climbing mountains. And at the same time, we are humble. We make mistakes. We learn from each other, from our customers, from our partners, and we learn quickly because in emerging markets, things are moving very, very fast.
We are one dLocal. So, we would like to take a few minutes to speak about our culture. I know every company has values written on the wall, and those are worth not much. What really matters is how the company operates and the way we exist. We are obsessed with solving complex problems. The first time I went to India, I called Jaco and I said, Jaco, this is a nightmare. We should definitely do it. This is a market we need to be in. It's complex, it's volatile, there's full of friction. This is the type of market we need to be in. Because if it's complex for us, it means there's complexity for everyone. And if there's complexity for everyone, there's a problem to be solved. And if we solve that problem, we're going to be able to create value and capture some of that value. We like complex problems. You can tell. We want the most complex problems out there because the price, it's huge, and the value added, it's massive. Speed. People underestimate the importance of speed. Doing things fast and iterating, it's essential. In emerging markets, things are complex. We cannot be perfect from day one. We need to constantly improve. So recognizing that speed is an asset on itself, it's a huge, huge differentiation. Everyone can say they are passionate, but I would like to give a few examples. We said we wanted to win in Africa. We made it, we said it, we launched in 19, in 20 we started to take it even more seriously, in 21 we said we need to win. Jaco moved to South Africa. We're not telling other people what they need to do. We are walking the talk. If we want to win in Africa, you need to believe there. When we wanted to get our first Chinese merchants, I moved there. It wasn't easy. I didn't know anyone in China. And today when you look at our merchant base, many of those merchants are Chinese, and they're extremely relevant. So asking people, not asking others to do what you wouldn't do yourself, it's a key thing for us at dLocal, and we can give many, many examples. And the last point is that we want everyone to act like an owner. We are partners in this, and we want to be frugal spenders. And we own this company together between the management team and some of our founding shareholders here. We own close to 80% of the company. We are totally aligned in this, and I think that also has a big impact on our culture. One other question we sometimes get, you hear speak us a lot about this one dLocal concept. Fede will speak about from a product standpoint, Maria will speak from a growth perspective, John will speak from a commercial standpoint. We sometimes get asked, how do you do so much with such a small team? And we made a very clear strategic decision when we started, which is, this is one company. We are not 20 different payments companies under one umbrella. This is one payments company. It means one API, one contract, one team, one culture across everything we do. So having that ability, it's massive. Why? Because global merchants won't integrate you twice. Google won't go through the process of integrating dLocal once in Mexico and then have to do it all over again in South Africa. That will never happen. And Amazon doesn't want to have an experience where the experience they get in Latin America is great, but the experience they get in Africa, it's totally different. Or the experience they get in Southeast Asia, it's totally different. So you see that we run a very diverse business, a very geographically diversified business. We offer 900 payment methods, but it's one company. And I think that's a huge differentiation.
Okay, we're very, very proud of the list of names of companies that trust us. These are some of the biggest names in the internet arena. There are some names missing, and there are some names that you may not know or you may not recognize, because there are some companies that have made their business of selling into emerging markets, and they have gone through the trouble and the process of customizing their offerings, preparing products especially for emerging markets, customizing the websites, translating, accepting payment methods. And there are, of course, many other names that we're going after. Sometimes people ask us, haven't you captured the whole market? The answer is definitely no, because there are, of course, a second tier, a third tier, and even the first tier is not complete yet. And as Eduardo said before, each one of these customers is working with us in some geographies, some with more, some in more, some in less. On average, our largest customers will work with us in 10 different geographies. We have 40, and we are adding more. So we'll continue to grow with our merchants in the geographies we're at. We will add more products, we will add more merchants, and we will add more geographies to the existing merchants.
The other thing I'll add is that dLocal has a very basic strategy. Here your merchants are executing it. And we have the luck to have some of the best merchants in the world. We learned how to process credit cards from Netflix. Netflix taught us how performance in credit card processing worked. Amazon told us how scale looks. What's an SLA at scale? Amazon won't allow a 0.1% mistake because everything is huge. We learned from Didi what international expansion means and how speed is important. We've generally been hearing and listening and learning from our merchants. So everything we do at dLocal, you hear us speaking a lot about this, starts with these logos. We are indexed to their growth. And if you believe that emerging markets, as I said before, are going to be relevant, and if you believe global merchants are relevant in those markets, I personally really believe in that. We are the best index for that. There's no better merchant list, and there's no better geographic exposure to emerging markets than the one we have.
And sorry, if I may add,
please.
Many of the big tech companies are seeing their growth plateauing in the large markets. They still have a lot of growth in the emerging markets. That's where they're looking at, and that's why they're coming to us more and more. We're just getting started. There's a statistic. Before I came here, I ran a report. In the last month, 40 million end users paid through our platform. That's a big number. 40 million people depended on us, and for transactions that, as I said, wouldn't have happened without us. But we are operating in a geography with over 4 billion people. That's 1%. 2 billion connected people. So, I mean, at least, I would expect at least, I don't know, 10% of the people to be paying for these type of services, maybe even more. We have a lot of room to grow. We are just getting started. There are more geographies to cover. There are more customers to conquer. And there is a lot of more consumers to serve. We are super proud of what we built so far, but we are even more bullish about what's coming ahead.
I'll just add one last comment, and I'll let Maria take stage. And this I'll borrow from Martin. Companies sometimes get lost in the short term. We all get very worried about the next quarter and the latest news and the latest tweets. And we are building this company for the long run. The opportunity ahead is massive. Emerging markets are going to be a massive driver of growth. And again, we are indexed to that growth. So as much as you can, I highly encourage you to look at the long term, really understand the underlying trends. That's what we are doing at dLocal. That's how we go through all this noise, because we are committed to the mission and we believe on the other side of all this noise, there's a massive company to be built. Thank you very much. Maria will cover on our growth vectors.
Okay, now I can move the slides. Thank you, Seba. Thank you, Sergio, for the fantastic introduction to our business and overview of dLocal. I have seen many of you before, and I'm looking forward to continue discussing our opportunity and our business. Now I'm gonna cover 3 main topics here. 1 is our market opportunity. 2, our growth strategy, how we have been capturing this growth and how we're gonna continue to do. And the 3rd one, our competitive and sustainable advantage. Starting now on our market opportunity. Our opportunity is huge. We are talking about $1.4 trillion in digital payments in emerging markets across the markets that we operate in today. I know that everyone here loves to talk about gross take rate, net take rate. If you do the quick maths here, it is over 50 billion of revenue up for grabs, over 20 billion of gross profit, and over 15 billion of EBITDA. But what excites us the most about this opportunity is that all those markets, they are very poorly served, as Martin mentioned earlier on. We are just scratching the surface. Even being the leader in this space, we still have less than 1% of the market opportunity. And what continues to excite us is the growth opportunity of these markets. There are very strong tailwinds in those markets. To mention a few, internet usage is continuing to grow across our emerging markets. Consumer spending. The growth of consumer spending across emerging markets is almost double what you see in developed markets. And combining the internet usage with the changing behavior on our consumers that are more and more preferring to shop online versus offline, you have the e-commerce penetration, which is growing double digits in emerging markets. And when you compare Brazil, which is one of the most developed in terms of e-commerce penetration, to UK, we have basically a twofold opportunity just by doing that math. And UK continue to grow. This continues to supercharge our market opportunity, which is set to be over $3 trillion by 2028, with each of the markets that operate in growing at least at 16% CAGR. Now that you have seen the massive opportunity ahead of us, let's tackle how we have been growing, how we're going to continue to grow. Our strategy is based on 3 axes of growth: product, merchants, and geography. And we're going to cover each of those. First, starting by product. You're going to see this many times today, and it's very important to have this in your mind. We solve for many complexities across 40 markets, 900 payment methods. What is very important? We have our merchants on the center of everything that we do. Our merchants, Amazon, Google, they do not have time to think about the complexities of each emerging market. That's not their core business. They have bigger things to think about. We solve for them. More than solving for them, we have to package this in a very simple way for them. And this is done through one API, one dLocal. It's one integration. We cannot ask Amazon or Facebook or all the other logos that you have seen to do other integrations with us. It's only once. And with that, we enable them to truly access 2 billion users. And when I talk about truly access, it's very important to cover like how the payment system works in emerging markets. If you're in UK or in US, with basically 3 different card schemes, you can cover more than 90% of transactions, Visa, MasterCard, and Amex. In emerging markets, this is completely different. You have markets where alternative payment methods is more than 50% of the overall transactions. You have like single payment methods specific to one market. I know everyone here is familiar with Pix in Brazil, right? More than half of the population of Brazil use Pix on an active base. And as you have seen before, a global payment company that I truly admire, they stop supporting Pix. It's not about just creating the connection. You have to enhance the connection. You have to continue to improve. You have to comply with all the regulatory changes. This is complicated and it's difficult to replicate. You see the same spectrum when you look into regulatory points or tax or compliance, which Gabi is going to cover later on here. Every single market is different. When you look into Europe, you have a very consolidated regulatory framework, tax framework that applies across all the different markets. In emerging markets, they are completely different. Even Brazil and Argentina being neighbors, they are completely different. So for all that, very importantly, connected to one single API. Now, moving to our merchants. This is our most important stakeholder. I know that many of you are shareholders, but our merchants is on the center of everything that we do. Every time that we think of a product, geography, how you operate, we're thinking about our merchants. And this is the result of that. We have grown tenfold from 2016 to 2022, over the past 7 years, and we continue to grow. Very importantly, we continue to grow across various verticals. The way that we build our product is vertical agnostic. We can serve the various verticals. Also, the way that we approach sales, and John's going to cover this later on, we also approach this being vertical agnostic. We can serve every single merchant. Now, once we win a merchant, once we onboard them, our focus moves into how we expand with them, how we grow with them, how we continue adding opportunities with them. And this you can clearly see through our cohort analysis. From the time that we start year and year, we have been adding more geographies. We have been adding more payment methods. And this turns into like continuous growth of TPV, which is revenue, and you're going to see this on our financial results that Diego is going to cover later on. Now, when you look into these cohorts, this translates in our metric that we're also very proud of, our NRR. We have best-in-class NRR. Our NRR has been consistently outperforming our peer group, which is around 120%. Our NRR for 2022 was at 165%. And what is underpinning our NRR? First of all, churn. We basically have no churn. Our churn is less than 1%. Secondly, we grow with our merchants. We know that all these global companies, their growth comes mostly, like the highest rate of growth comes from emerging markets. Then you have the share of wallet. The share of wallet is very important because this shows the satisfaction of our merchants in our solution. They continue to trust more and more volumes with us. And this is like a conscious decision that they take every day. And then we have also opportunities which continue capturing by cross-selling those merchants to new geography and new payment methods, making them, enabling them to reach more and more users across emerging markets. Now let's focus on our share of wallet. This is a question that I get a lot. As you know, it's very difficult to find the precise numbers of share of wallets. But what we have done here, we mapped our opportunity for our main merchants. Together with them, we saw all the opportunities that we have with them across the markets that we currently operate. And we're still just scratching the surface. We have 10 to 12% of share of wallet. Just by that, there is a 5 to 10% fold opportunity. And why are we so confident about that? When you zoom in the share of wallet that you can capture within one payment method and one geography, we have been consistently growing for our merchants. Let me explain here. There's a lot of information here. We have here 3 examples of 3 different merchants. The companies are very well admired by everyone here. On the top part, we are looking to how we have been growing our share of wallet within one payment method and one geography. On the first one, this is the largest social media company in the world. So we are working with them in Brazil. If we take the example of one alternative payment method in Brazil and how we have grown with them over the past 4 years, we got to 50% of the share of wallet. Second example, very well-known ride-hailing company. In Mexico, if you look into credit card and debit card, we got to 90% of their share of wallet. And this is also true for South Africa with one of the largest fashion growing e-commerce in the world. We got to 100% of their share of wallet. This shows the trust that our merchants have in our solution and how we have been consistently showing better performance than peers. In the meantime, those merchants didn't stop with us with those payment methods. They are consistently growing countries, products, and payment methods, which have been consistently enlarging our opportunities with them. Now, let's move to the third axis of growth, geographies. We started in Brazil back in 2016 with one payment method. Since the beginning, we harbored global ambitions. And over the past 7 years, we added 40 geographies, over 900 payment methods. We enable each merchant to truly operate across emerging markets. How we do that? We have a consistent playbook that has been tested many times. How we have been so successful? We are a global company. We serve global merchants, but we leverage local expertise. When we think of expanding to a new market, we started typically with the discovery phase. And as you know, this starts with like an ask of a merchant. The merchant needed us in a specific country. We also look across our base, what other merchants would like us to be in that same country. We analyze the market attractiveness of that country. As you know, being profitable is in our DNA. And we want to be profitable in each region with each payment method from the outset. We analyze also the payment ecosystem, the regulatory ecosystem. Once we decide to launch, we move to the next phase. We build a start team. And a start team, we mean we leverage dLocal. So as you have seen, Seva spent some time in China, Rafa spent some time in Africa, and we hire local expertise. We hire local talents. We also equip ourselves with the best experts in the region, the best experts from a regulatory standpoint, from a tax standpoint, or from a payment standpoint. We collaborate with the regulators. In many cases, we come into a geography that they do not have an evolved framework for payments. We collaborate with them, we partner with them, we help them evolve this framework. Once we enable the merchants to operate in those geographies, then we move to the next phase, accelerate. We scale our volumes, we bring more merchants in there. We build more connections, we improve our connections, we improve our conversion. Like this, we improve performance, which also translates into our numbers. Here I have two examples of geographies that we expanded. They're very different, as you can see, Morocco and Philippines. But when you look into the pain points, it's very similar. We had merchants asking us to go to those geographies. We had a very fragmented payment space, where in Morocco, 5% of the population could have access to international credit cards. More than 50% of the transactions were done through alternative payment methods. Competition. There was no global payment company serving global merchants. They would be there only through international acquirers. And as you can see, with that, you only reach 5% of the population or less. We collaborate with the regulatory authorities to build a framework. We got a license. And what was the result of that? Besides enabling global merchants to operate in those countries, we also improved their conversions that they were seeing on their credit card transactions by at least 40%. Now, let's talk a little bit about how these three axes play together: product, geographies, and merchants. The way that the local platform is built, for every product that we add, that product is available across geographies. There's a network effect on that, because everything is connected to one API. So every combination of product and geography, it is automatically available to every single merchant. When you look into this slide here, you'll see that at the end of 2022, we had more than 100,000 potential connections. This means a current or potential stream of revenue. This is a combination of merchant, product, and geography. In 2018, those potential connections were like 5,000. We have been growing exponentially. And with that, we can assist more merchants. If you compare a merchant that comes in 2018, they had one connection. One merchant, one geography, one product. We have merchants that started in 2020 with 10, 14 connections. And very quickly, they expanded to 40 connections. There is a massive opportunity just inside our installed capacity. And you continue to compound on each of those axes. Now, let's see our competitive landscape. There is no one doing what we're doing. We wake up and sleep every day, think about emerging markets, how it can be better in emerging markets. And when you look into the potential competition, so the first one that we have here is Adyen. We highly admire Adyen, but they are focused on developed markets. We, as I said, we wake up and sleep every day thinking about emerging markets. Other ones that I think are worth to comment here. International acquirers, as I said, with international acquirers in emerging markets, you are reaching 5 to 10% of the population. You're not truly enabling global merchants. Then you have regional PSPs. They can have some global merchants, but they do not serve like the same kind of global merchants that we operate. They cannot serve to the same extent. Very important here, many times they might be operating across 3, 4 geographies, but it might be required for our merchants to build another connection. Can you imagine asking Amazon, I have an integration here, it's great, but you're going to have to build another one to operate with us in another geography? That's not possible for global merchants. Those are the most demanding merchants. So with that, we have confidence that we are like positioned to be the winner in this space, to capture this huge market opportunity ahead of us. We have a unique product that is difficult to replicate. We have been growing exceptionally for our merchant base. Our merchants trust us, and they continue to trust more volumes every day. They take the decision every day. We have an outstanding playbook to expand to new geographies. All this compounds, and we have been consistently widening our moat. With that, you know that at dLocal we are obsessed about execution. I'll leave you with Jaco, our co-president and CEO, and Moses to talk about like how you have been expanding and being so successful across many geographies.